Welcome to Off the Record, talking real estate with Joe and Makayla. If you're interested in the Portland, Oregon real estate market and want the unvarnished inside scoop, you've come to the right place. Thanks for giving us a listen. Okay, welcome everyone. Thanks for joining the show. This is the Off the Record podcast with Makayla Mast and Joe Reitzig. Hi, Makayla.
Hello, Joe. How are you?
I'm fantastic. I am basking in the glory of a beautiful Friday. And we've got a great topic for you today. So today we're going to be talking about where the Portland housing market is expected to land in 20 years. So 2046, what are the economists predicting for the Portland housing market, which I thought was fascinating. And we're going to do that by looking at what the economists have said, in hindsight over the past 20 years. So looking at that data and then reflecting that to the future. And obviously, there's a lot of caveats with this and all sorts of different if, ands, or buts. But for the most part, I think it's super interesting. So I'm excited to share this today.
Yeah, I love this. Thanks for this great idea. I think this will be super interesting.
I got this idea from a post that I saw online about what costs were pre-World War II.
Yeah.
And I was like, good Lord.
It's always a gut punch, isn't it?
It really is a gut punch. But the flip side to that is we are where we're at now. And everyone's like, oh, it's so expensive and this and that. Well, yeah, if you're looking back. But let's look forward today and think about what that means if you're thinking about buying or selling a home, or if you're considering waiting for a significant amount of time, because the numbers are shocking.
Yes.
Yeah.
Also a gut punch.
Also a gut punch, yes. So
okay, fine.
We will go there. But our first topic of the day is
our off the record moment. It can be a confession, a gripe. Usually we go the gripe route.
Oh, I'm going full gripe today.
Me too. And it can be real estate or not real estate related.
Yeah.
Do you want to start us off?
Yeah, sure. And I'm going to go ahead and say 99.9% of the people out there are going to be with me on this one. But my gripe is inflation. Good golly.
I know.
For crying out loud.
Not even funny. It's almost funny.
It's almost funny how bad it is, but I went shopping the other day and I was just shocked at some of the prices. And it's just so crazy. You can see the prices almost from week to week, like in the grocery store, moving up. And they were expensive before, and now they're even more expensive. So that's my gripe. And yeah, can we do anything about it? You, me, and the person watching this? No. Or listening to this? No. But I'm just tired of it.
That's fair. I almost threw up the other day buying a pound of ground beef for $10.99. I could not believe it. I was so beside myself.
I know. That better have
that was the cheapest one I could find.
That was the cheapest one?
Yeah.
Oh my gosh.
I know.
My wife and I have been laughing at each other because when we go shopping, like, we are our parents and our grandparents now.
Oh, yeah.
Like, she came home from the grocery store the other day and she's like, you'll not believe the steal I got on this. And I'm like, golly, is that us now?
It's so relevant because the inflation problem is insane. So
yeah,
it is what it is.
It is what it is. But yeah. So what's yours?
That's so funny because my gripe is also shopping related. As you know, I ran some errands before this.
Sure.
Okay. I feel like when I was a kid, if you went up to a grocery store person or someone working at a store and you asked them a basic question about where something would be, they would usually know at least the right direction.
Yeah.
Twice today in a row, they sent me in opposite. They either told me they didn't have the item or they sent me to the opposite side of the store. And normally I wouldn't really care, get your steps in. I'm limping. I'm pregnant. I don't have time for 3 trips around Costco.
No.
And I took 3 trips around Costco,
which
I had to call my mom because I was almost in tears because I was in so much pain because I'm limping so bad. She's like, oh, it's right over there. I'm like, oh, why didn't I just call my mom? I feel like people don't know their heads from their tails.
And Costco moves stuff all the time.
They do. Yeah.
Those buggers. If you're getting wrong directions at like a little grocery store, that's one thing. But when you're getting wrong directions at Costco, I mean, some of these Costcos are in 2 different zip codes.
They are huge. And one time I ditched my cart and I was just walking and then it was rough. But
Yeah.
all that being said, I found what I needed. It just took me way longer than I needed to.
What were you looking for?
Quiche.
Quiche? Like pre-made quiche?
At Costco. Have you ever had it? It's pretty tasty.
Huh, no.
But you'd think it'd be by like the cheese and the breakfast stuff. But no, it was by like a weird, like by the beer at my Costco. It didn't make any sense.
No.
So.
No, not at all.
That is my gripe of the day.
I'm with you on that one. Do you want to know how old I am? My shopping list is made by my...
Oh, your route?
My route.
That totally makes sense.
Yeah.
I love that.
I just started doing that the last year, and I'm like, this is brilliant.
Yeah.
I love this.
So you're not reading it 15 times.
Yeah. But guess who's not on board with that?
Your wife?
We share, my wife, and we share a Apple Notes for our grocery list for different places we go. She doesn't get it.
Oh.
Yeah.
Dang it.
So I'm going down the list of everything I need, and all of a sudden it's like, wait, why is this here? Now I got to double back.
Right.
And
sometimes it's not worth the trip.
Costco. Oh, trust me, if it's one of the things she wants, she may or may not get it. Sorry, sweetheart.
And that's fair.
Learn how the layout works, and we'll be just fine.
Yeah. So,
okay, well, good.
With all that,
don't
worry, folks. We end this episode, every episode, with something that we're loving to leave you on a happier note.
Yep.
It's a journey here.
We clear out the negative stuff up front, and then by the end, we're happy, and we get to our positive stuff.
Yes.
Yeah. So let's talk about where Portland housing is going to end up 20 years from now. And, I think what we need to do is start with the baseline of where we're at now. And home prices right now are right around $525 or so.
Yep.
And that's the median, not the average, but the median. If, and median people remember is if you line up every single sale and then pick the one that's exactly in the middle, that's the median. So flat to slightly negative growth.
We needed it after that 2021 peak. So
yeah. So values are coming down just a little bit in most areas, flat in others, talking to you like Oswego and some of those areas where it's actually going up a little bit still. But what about rents, Makayla?
Rents are between $1,800 and $2,200, depending on what you're looking for.
Is that for a 3-2?
Yes, I would say a 3-2 is closer to 22, 25 even. But I think 2,000 is a good medium place for us if you're considering apartments and all different types of housing.
Yeah, and average mortgage payment is 25 to 27, 28, I would say.
Okay.
Yeah.
And that's because a lot of people have lower interest rates right now, which is great.
So renting is still a little bit cheaper. We just did a podcast on that whole thing. So if you want to go back and find out about renting versus buying and get the inside scoop on all that, that was a really good episode. And I've actually got good feedback on that one from some folks.
Good to hear.
Yeah. The biggest thing that we're facing in the current housing market is affordability. Prices have shot up. Wages have not kept up. Less and less people can afford to buy a home. So that is the reality of what we're in right now. But what does the last 20 years tell us?
I love this. This is crazy. So this is from 2006 to 2026, which I don't think 2006 was 20 years ago.
Let's do the math. It was.
No. It makes me feel old. Okay, so in 2006, median price of a home here in Portland was between $280,000 and $300,000.
Yeah. I know. I've told you this. I remember the first house that I listed that was $200,000. And I was like, holy smokes, this is the big time. I think it was 97.
So crazy.
Yeah, I was like, oh my God. And it was a house over in Southeast Portland. Beautiful house. Like 207,000. And that has always stuck with me. Like, oh my gosh, this is just such a fantastic home. And then when you got up into the 400,000 and 500,000s, you're like talking some serious, like these are big time homes.
Like mansions?
I wouldn't say mansions, but just
But like a really nice family home.
Nice 3,000, 3,500 square foot plus home in a great neighborhood.
Wow.
Yeah, 500,000 back in 2006. You're getting a nice house. Gosh. Really nice
Why
house.
didn't my dad buy me a house in 2006? Come on.
You were a baby. Yeah. The bottom was 2012. 230 to 250 was the average.
Wow. Okay.
Yeah.
Interesting.
Yeah. I'm sure we're blowing some minds right now of people that are listening. Like, what? 230? Back in 2012? Mm-hmm. Yep. That's what it was.
Can't get much for 230 anymore.
Yeah.
Condos.
Yeah.
So and the peak was in 2021 at 550, which is interesting.
So for appreciation rates, we're looking at 3.5 to 4.5 for the most part. Rent growth, on the other hand, 2011, $900 to $1,000 for a 2 or 3 bedroom home in the Portland metro area.
That's crazy. 900.
Yeah. $900.
Wow.
I remember in 1995. Stephanie and I, this is right before we got married, we were living on Southwest Altadena in Southwest Portland. Beautiful neighborhood.
Very nice street.
Yep, very nice street. In a 3-bedroom, 2.5 bath, split level, our daylight ranch. And we were in there with another couple, and we were splitting like an $800 rent, so $400 a piece.
That's so crazy.
Yeah, it was nuts. It was nuts.
That's awesome.
So rents have gone up 4.5% to 5%. So a little bit faster than prices, which is a little bit scary.
Yeah. Makes renting unaffordable. Everything's unaffordable.
Yeah. Mortgage cost volatility. We had the 2-3% in the 2021, 22 that just put a torch to the market and everything was on fire. But everyone knows where it's gone since then. 7.25, down now to 6.5. We were below 6s for a while there, but then stuff happened. We won't date this episode, but things happened. So ownership cost has been rate driven, not just price driven. And, you know, we see that in this market.
Yeah.
Some of the structural drivers over the last 20 years, population growth and migration cycles. And Portland's had a very strong inbound migration, which has been great.
Yes.
Land use constraints, so the urban growth boundary, really, we weren't able to put a whole lot of inventory on the market in the last 20 years compared to a lot of other metro areas,
right? Which
has its good and bad. I lean on the side of it being more of a good thing than a bad thing, right? Wage growth is lagging housing. And, you know, that's what we've talked about with the affordability.
That's true for everywhere in America.
Yeah, totally. And then new construction. It's been really difficult with the volatility of the market over the past 20 years to get consistent new homes into the marketplace. And right now we're seeing a lot of new homes. But, you know, people need to remember that it takes 2 to 3 years to get stuff out of the ground. So 2 to 3 years ago, they had no idea what market we were going to be in now.
Sure.
And so that's why it's kind of, you know, it's kind of difficult for these guys.
It's a very risky game to be in.
Yeah.
But probably rewarding.
Yeah. So let's look at the economic modeling assumptions for looking at 2046. Okay. So inflation, 2.5 increase over long term. I don't know exactly what that means. I'm getting a lot of this from different economic forums and different things. Just that, you know, inflation will hopefully stay about where we're at right now.
Okay.
Real home price growth, probably 1.5 to 2%. National home price growth, 3.5 to 4%. Rent growth, 4 to 5%. And then mortgage rates normalized to 5.5 to 6.5.
Okay. That's good to know.
Yeah. And that's the forecast for the next 20 years.
Sure. Okay. So key constraints here, like we just talked about, Oregon land use policy limits sprawl.
Yep. And then construction costs remain structurally high. And if it, those poor builders, when the cost goes up and fluctuates so much, it really digs into them. So depending on where that goes over the next 20 years, that could have a big impact on some of this forecasting. Middle housing increases density but doesn't crash prices. I'm thinking that means, and I've heard a couple of economists talk about this, the middle housing of, that price point where everyone's looking, they're going to be looking for density. Portland's always looking for density.
Right.
All the different metros around here are trying to get more dense, but hopefully that doesn't crash prices, which I don't think it will.
No, I don't think so either. No. The demand is there.
Yeah, so let's get to the fun stuff.
Oh, so crazy.
The forecast for 2046.
I love this because Joe has a little crystal ball emoji by this section, and we always say, we don't have a crystal ball.
Yeah. But this time
we might.
We're going to give you the crystal ball. So median home prices, Mac, what are we looking at? And this is assuming we go from $525 median price to... I know.
$1 million to 1.15.
Yeah.
Eesh.
So 525 is our median right now, and really that's entry level for most of the areas in Portland Metro. So assuming that $1 million in 2046, $1 million home is going to be the entry level. How nuts is that?
It makes my stomach hurt.
So we're going to double, almost double.
Wow.
Yeah.
But if you've bought a home recently, that's assuming that your home value is also going to double by then.
Yeah. So I guess what we're saying here, people, is, looking back is very easy to do because it's all right there. Looking forward is much more difficult. But if we can look at the past 20 years and the 20 years before that, we kind of know where we're going to be in 20. And home ownership is going to be more difficult. But if you can get in now, you're going to be in a really good place in the next 10 to 20 years. So,
Yes. Well said.
Yeah.
So monthly mortgage costs in 2046. This is interesting. So this is assuming you put 20% down, you get about a 6% interest rate, you pay about $1.1 million for that home. Your loan is around $880,000. That brings your monthly mortgage payment to $52,000 or $58,000 a month. Between
$5,200 to $5,800 a month. Yeah.
Whew.
Yeah. The big question becomes, will wages keep up with that?
Well, no.
No.
Because historically, they haven't.
Yeah. So those are the numbers that we're looking at. But what we want to look at also is, what if it's a bull market? And for everyone that's not stock market savvy, bull market, good. Bear market, bad. I've never understood that. If you got a bull running after you, that's not good.
No.
If you got a bear running after you, that's not good.
Also not good.
Man, both of these. But
that is really funny.
I might have to Google that and see why bull is the better one. But bull is the what we want. So here in Portland Metro, tech expansion, which is forecasted actually to happen for us. So Intel, AI, more remote workers, all of that. If tech really takes off, like a lot of people are talking about for Portland Metro, even more so than it has in the last 20 years, that's going to be a good thing and could push our housing market even higher.
That makes sense.
Yeah. And the other thing is climate migration to the Pacific Northwest.
Sure.
This was an interesting point that I had not thought about, but I get it. I get it. I mean, we have so many people that we have sold their homes and they've moved to Southern California or Arizona. And at some point in the next 20 years, all of those 115-degree days down in Arizona are going to be 125 days. And that's just not sustainable for a lot of people.
No, it's not. That's really interesting. So they'll come back.
Maybe come back. But also, there's just so much for the Pacific Northwest to offer. And I think migration, it's always interesting. I love looking at migration patterns and why people make the choices that they make. But I think it's probably a pretty good bet that Portland Metro and the Northwest in general is going to do positively. better
Yeah.
than most areas.
Yeah, I would think so.
Yeah. So in a bull case, Makayla, and this is going to make you even more uncomfortable. The bull case scenario, prices could be $1.2 to $1.4 million in 2046.
Okay.
Yeah. But
I like that we're considering all these scenarios.
yeah, that's one scenario. But let's look at the bear case,
Okay.
which is if things are not great.
Yeah,
And
people continue to move out.
So if there's population stagnation or out migration, a negative migration, that would be bad.
Yeah.
That would be bad. We've seen it with Multnomah County and Portland proper with some of the decisions they've made, the taxes they've got in place, those type of things. Washington County and Clackamas County have not seen that, which is good. My guess is Portland gets their act together with some of this stuff in the next 20 years.
They have to. They don't have another choice.
I would agree with you on that. Yeah. So if there's a new major zoning overhaul and mass build out, they open up the urban growth boundary a little bit more or a lot more, that would really affect pricing because we'd have a lot more inventory. The other one is prolonged interest rate hikes, higher interest rates. I don't see the population stagnation, negative migration or the major zoning overhauls happening. I don't think that's happening in Portland
No, they're
Metro.
pretty tight with the zoning.
Yeah. But prolonged high interest rates, maybe, right?
Yeah. That would be a national issue too.
Yes, it would.
Obviously.
Yeah. So over the next 20 years, if we saw like half of those years at really high interest rates, that's going to keep prices down. So the economists say in this bear case, Mac, 800 to 950, and that's a big margin they gave me.
That is a big margin.
Yeah. But still.
Okay.
If 800,000 is your median price, which ends up being pretty close to the entry level, that's still a number that is pretty scary.
That's a significant mortgage payment still.
Yeah. So gauging in between these, the best case scenario is probably $1 million to $1,150,000. I think that's probably a pretty safe bet.
Okay.
And I would venture to say we're probably going to be on the $1,150,000 side of that.
Okay. You're saying it here.
I'm calling it, people.
We're going to check back in 2046 when we're still inevitably filming this pod.
I am going to be so incredibly old in 2046. You'll have to check back with me, and I'll call in from the beach.
I was going to say, I hope you're spending half of your time in a vacation-y spot and I can visit you wherever you're at in the world, once a month, and we just do it for fun.
Well,
or we don't.
My plan is Oregon coast for half the year.
Okay. A coastie.
A coastie, yeah.
Cute.
I'd love to be a coastie in retirement. Yeah.
Heck yeah, that's the dream.
So what are the most important economic insights? The biggest shift over the next 20 years is not price.
It is the affordability gap expansion.
Yeah, and I 100% agree with that.
Yeah.
Right?
Yeah.
I mean, people need to be able to afford homes to buy them. And right now, in 2026, we already have this huge affordability gap. And if things don't change, that's just going to get worse. It's going to be a problem unless it's full on addressed. And it's not going to be addressed locally. It's going to have to be addressed nationally, federally.
Right.
So we will see. So the bottom line is median home price, probably 1.1, 1.15, monthly mortgages, 56 to 5,800, rent for a 3-bedroom, 2-bath home, 47 to 4,800, appreciation rates 3.5% to 4%, and the market conditions, supply constrained and affordability stressed.
So the same issues as today.
So ain't nothing going to change but the
Shocking.
price and value of the homes. Yes. So, one of the economists had a statement, and I wanted to kind of share it here.
Sure.
He said, ownership will become increasingly exclusive. And the defining theme of the next 20 years, housing becomes a wealth asset first and a shelter second, which is nuts.
Yeah.
I mean, I get you can go rent and you got a roof over your head and the whole thing. But for so many people to miss out on the economic impact of ownership, I think would be awful.
And just the pride. There's so many things that come along with it.
Yeah.
It's the American dream.
Having your place.
Yeah.
Right? Yeah. So that is our forecast, people, and we hope we didn't scare you too much. It's not scary. It's just kind of where things are probably going to be.
Right.
Assuming that there's no, crazy issues and things don't go off the deep end.
We don't need to go there.
But we're not going to go dark. We end with a positive, people.
Yes, as promised, we end with something that we're loving.
Yeah.
Do you want to go first or do you want me to go first?
I want you to go first because I forgot what I'm loving.
That's okay. Mine is kind of a twofer. One, because we're not allowed to talk about the weather, and it's kind of weather related. But have you seen the movie Eternity yet?
Negative.
You need to watch it with Stephanie. She'd be so happy with you if you sat down and watched that movie with her.
Am I going to like it?
Yes. But it's not one that you would choose to watch.
Did your husband like it?
Yeah.
Really?
Yeah.
Okay.
Super sweet movie. So it's about like this woman who dies, her and her husband die, and she has to choose whether to spend eternity with her first husband, who died at war when they were only married for 2 years, or her husband she spent 45 years with. And you pick all these different eternities that you can go to, and you only have like a certain amount of time to pick your eternity. There's like Paris eternity, soccer eternity, like whatever but they have spring eternity. Wow. And I'm like, oh, I think I would go to spring eternity. Yeah. I love spring so much. Yeah. So I'm just loving the current season we're in.
Any good actors in that one?
Cheesy. Yes, but I'm not good with actor names, but two pretty big actors. Yeah.
I will look it up.
So watch the movie Eternity, you guys.
Okay. I will put that on our list.
It's a tearjerker, but it's not. It's still like funny and lighthearted.
Nice.
Yeah.
I like that.
Thanks.
Yeah, we were talking about doing a podcast just on the shows we like.
Yes.
Makayla shares so many great shows with me. She's gotten us on to, I don't know if you guys are watching, Paradise is fantastic. It is a great show.
Everyone I know
you got us
is
hooked
watching
on that.
Yeah. It's because I won't shut up about it.
Yeah. What I'm loving is not nearly as exciting as that, but I love a good dog park.
Oh, cute.
I took my doggies to a little dog park that I hardly ever take them to, just right on the outside of our neighborhood. And it was a little pebble park.
Oh, cute.
Yeah, which my guys initially don't love. They're like, really, Dad? Rocks?
What kind of
But then they get in there and there's other dogs and they forget about it and they go running around. But a good dog park is something to behold.
It is.
Yes. It's a good vibe. Everyone there is nice. All the doggies are nice to each other and they're just running around, playing, having fun. Talk about peak positive vibe.
Aw, I love it. Yes. Such a good neighborhood vibe.
Yeah. Yeah, it really is. So we are both dog people,
nice.
so I
Big
thought I'd share that.
Yeah.
Yeah.
We should I just had an idea for a piece of content we're going to share on our website.
Oh, okay.
I think we should highlight all the dog parks.
Ooh.
On a map, an interactive map.
That would be fun.
Right? Why not?
That would be fun. And Rika, our producer right now, is cringing because she knows that will get thrown into her lap. Sorry, Rika. We promise that we'll do most of the work on this one.
Love to bring big ideas.
We do bring big ideas for her, and she always produces.
She does. It's astonishing.
She's the best, people. Do yourself a favor. Have a friend like Rika in your life.
Yes. 1,000,000%.
Yeah. So.
Okay, with that, we hope you liked this episode.
Yeah, guys, thanks for joining.
Yes.
And if you've got any questions about this, you can certainly reach out to us at liveportland.com, livportland.com. There's always lots of good information in the show notes. If you go to podcast on our website, click on that, you'll see the current episode. You can even watch us there, or you can go to YouTube and watch us at that location. Be sure to hit subscribe so you get all the new episodes.
Yes, that helps us out a ton, so we appreciate it.
Yeah. Thanks, guys. Have a great day.
Bye.
Bye.
Thanks for joining us today. If you're interested in finding out more about Joe, myself, or the Live Portland team, you can go to liveportland.com. Thanks for giving us a listen, and see you next time on the Off the Record podcast.